Part 1. What is a natural disaster? A natural disaster is a consequence when a natural hazard, such as volcano eruption or earthquake, affects human or the built environment. They can lead to financial, environmental, or human impact. On March 11, 2011, a 9-magnitude earthquake took place in Japan, causing tremendous damages to the areas that are affected with the following tsunami. To know the effect of disaster on the stock market, we look into the stock price on the Nikkei 225, Nasdaq Composite, and Hang Seng Index. In the first few trading days in Tokyo after the earthquake, the Nikkei 225 closed down with a 10.5%, which is the third steepest percentage fall in Nikkei's history. Both Nasdaq Composite and Hang Seng Index reacted similarly with a drop of 1 to 3% in mid-March. From the number we have mentioned, we can clearly see the destructive, negative impact that natural disasters bring to the overall finance market. But there are so many natural disasters in the world. Just in the first 3 months of 2011, the world has undergone a long list of disasters, excluding the Japanese earthquake and a tsunami. Therefore, we want to investigate how companies avoid the economic damage in the financial market of a natural disaster. There are two main ways. The first one is to diversify the risk by diversifying portfolio holdings. The second way is to share the risk by finding business partners or contracting insurances. So how do you diversify your portfolio? For investors, in most cases, natural disaster is a risk that can be diversified away on a cross-country basis rather than a cross-sector one. Why? Because it is seldom observed that a natural disaster occurs in the meanwhile in every country around the planet, or at least every region. However, when it hits a specific country, it usually damages the overall national economy, regardless of the sector. But the truth is, studies have shown that most portfolios around the world remain focused on the home country's market, and thus they are highly exposed to natural disasters occurring at a specific place. And this phenomenon is known as the home bias puzzle. So how does that apply in Japan's case? The home bias puzzle is particularly true for Japan. Japanese investors, by clinging to an average ratio of 60% to their portfolios hold in domestic securities, suffer sizable opportunity costs from the 90s to the 2000s. And 2011, these opportunity costs turned into actual ones when the earthquake shocked the nation. So how should the corporates prepare for themselves? First, for any project undertaken by an operating firm, the CFO should internalize an analysis that look into the natural risk of the location where the products are to be marketed. Second, if needed, the investor should diversify the risk by conducting sales simultaneously in several markets. And this demand approach is the main factor now leading to the globalization of the financial products in the market. Another approach to avoid the damages, sharing the risk. So how do the firms do it? To achieve this approach, an operating firm could look for associates to share the local natural risk with. For instance, it could outsource to local partners or engage in a joint venture. Also, the firms can also contract insurances against natural disasters. Butterfly effect on Japan earthquake in global economy. The damage caused by the earthquake is indeed severe and tragic. However, the Japan earthquake caused several butterfly economic impacts globally. First of all, the salt accident in China is the best example to illustrate. As Japanese people are making long queues at supermarkets that impose rational purchases of daily goods, China has sunk into a panic buying over salt for the word of mouth. The rumor saying that the salt which contains iodine could prevent sickness from nuclear radiation exposure. Because of the panic, the stocks related to salt manufacturing industry and even the pickles manufacturing industry were reported to have a boom with an average increase of 7 to 10% in the second week of March. Natural disasters are inevitable. Therefore, it's very important for us to try to find a way to minimize the possible damage. This is the end of our presentation. Thank you for watching.